Hello, everyone. Welcome to the Worth and Wealth seminars. My name is Jennifer Duran. I'm a program associate here at the Office of Economic Empowerment. And today's webinar will focus on financial foundations, mastering banking basics. Before we jump in, I do want to give a note about the disclaimer. This webinar is being recorded, and you can find more details in the chat. Also, this recording, along with the presentations, some additional resources, will be sent in a follow-up email to all that registered. And as always, feel free to drop any questions that you have in the chat. Sometimes we'll have natural pauses, we'll be able to answer them, or we'll answer them at the end during our Q&A. And now it's with a lot of excitement that I introduce Cooper Fowler, a citizens representative, and he will be presenting on financial basics today. And I will hand it off to introduce himself.
Hi. Hi, everyone. Thank you for giving me the time today. I'll keep this short and sweet, but we're going to talk about some basics when it comes to banking. I'm sure everyone here has been exposed to banking before, whether that's your checking account with your parents, savings accounts. But we'll just sort of start with the basics, and we'll get a bit more complex as we go. Feel free to ask any questions. I know this is all going to be through chat, but I'm happy to pause at any time. I'm going to start sharing my screen. Let me know if you all can see this. So we're going to talk a little bit about the objectives today, a little bit about the importance of setting strong financial goals, some basic concepts and terminology. Really, as I go, I may use some terminology. Ask me what it is. I'm so used to talking about banking stuff 24/7, so it may just come out naturally. We're going to start building an understanding of the different products that financial institutions provide. Very basic stuff. We're going to talk a little bit about budgeting and savings, the importance of establishing a good credit and how we can manage that. A little introduction to some online banking and mobile banking. I'm sure everyone here uses it. And then we're also going to talk a little bit about security. I think that has been ramping up a little bit as sort of technology advances. Unfortunately, so does the scam increase. So we're going to talk a little bit about how we can keep your money safe. All right.
No comments in the chat. Yeah.
Yeah, no worries. We'll start with setting financial goals. When was the last time you guys sat down and thought about setting your own personal goals? And we're not talking necessarily about financial goals, but maybe, I want to be able to get my first car in the next few years. I want to be able to have enough money to put down on a mortgage. These different goals that we set through life are generally tied to financials. When we try to set these goals, I like to attach timelines to those, and we try to find a way on how we can actually achieve those. I'll elaborate a bit more on that on the later slide. The benefits really of setting financial goals, it gives you some sort of purpose and direction. You know exactly what you're striving for. I know exactly, personally speaking, when I was in college, the money that was coming in, it was spent on Friday because we're going out. Ideally, now I have certain strategies in place where I started treating my financial goals almost like a bill, where this has to happen before I can start having my fun. It's going to help you prioritize savings over spending, and it just makes you a bit more disciplined on how you actually budget yourself. Let's take a look at this SMART framework. It's an acronym that stands for specific, measurable, achievable, relevant, and time-bound. It sort of helps you set your own financial goals. We want to stay in a realistic realm. Ideally, everyone wants to be a millionaire next week, but I don't know if that's doable. So the SMART goal framework pretty much provides us a structured way to achieve our short, mid, and long-term goals. Specific really talks about defining your goal. I want to save $5,000 for an emergency fund. That's quite specific. And now we want to find out how can we achieve that through quantifying our goal with a goal to progress. So we look at saving $200 per month, which if we do that, ultimately after 25 months, we would be up to 5,000. Now, how are we going to achieve that? Like I said, we got to make sure these goals are realistic. Now, if I work and I make $1,000 a week and $900 are expenses, I don't think saving $200 a week is going to be doable or achievable. So we got to stay within a realistic realm. It's got to be relevant to your broader financial objectives, and this is more talking about long-term goals. An emergency fund, for example, will provide you that financial security, helps you with the what ifs, flat tire, something happened in your home. You always need a little safety cushion. Time bound, it really talks about making it, creating like a deadline and making it measurable in a sense where we want to have a specific date. If we don't have this done by this date, how are we going to overcome that? Now, let's say you want to save per month $200, but you had a really rough month. You're not able to do that. Maybe the next month you need to be able to save $300 and make up for that previous month. So that time-bound goal is very important. You want to be able to stick to that timeline. If not, you're really not going to be able to save much. Do you guys set any goals for yourself? Does anyone have any financial goals that they're trying to achieve? I know a couple folks here are from Salem State, so I know you guys are right out of college.
No goals yet, but I'll keep you posted.
No goals yet. Totally fine. All right. So we're going to talk a little bit now back to the banking side, a little bit about financial institutions. The bank really has two primarily objectives. It's we're going to accept deposits and we're going to loan people money. That's how banks make their money. Financial institutions do provide like a variety of different things between these two main ways of generating revenue. When we talk about accepting deposits, it's savings, checking accounts, CDs, which are certificate of deposits, money markets, and hybrids in between those. And then the lending side, of course, everyone knows student loans, mortgages, credit cards, auto loans, and personal loans. Again, there's a lot more to that, and there are some hybrids, but that's generally what financial institutions provide. There's also credit unions that act very similar to banks. There's no real differentiation between the two, but credit unions generally are more favorable when it comes to the lending aspect.
We do have a few goals here. Saving for a deposit to buy a condo, getting a car for some of them.
Mm-hmm. I'm sorry, what was that?
Oh, we have a few goals here. So one of them is to save for a condo, and the other one is to save for getting a car.
There you go. Condo is going to be a goal for myself too. But that's one of those longer term goals. I think we're going to talk a little bit about that a little later because when it comes to condos, we obviously have to borrow some money, and we'll talk a little bit about the rates. And then everyone likes a nice car. So good job on that. Banking products to manage your money. This really talks about the specific products that we have. We have these checking accounts. That's pretty much for your day-to-day transactions. Everyone sort of had a student checking account, most likely. You get your debit card with that, and you can go to grocery stores, convenience stores, and get whatever you need. Eventually, you want to start moving towards credit cards. Credit cards is you're borrowing money from the bank and you're going to pay that back on a given date. But you earn some cash back and some rewards. So I know some banks have travel rewards. They give you some flights. Some give you some discounts on entertainment. Some give you discounts on certain grocery stores. So whatever is most suitable to you, you want to find a good institution that will be able to provide you those benefits. And of course, these days we're all digitalized, so we look at online and mobile banking. Very convenient. It actually eliminates a lot of trips to the bank. You're able to do a lot of things now off your phone. Going to get back to planning for your financial future. That's sort of what we talk about. Accounts where we place money and we're not going to touch it for a period of time. Savings accounts are liquid, so you do have access to those, but again, treat those like savings. We do not want to use that money. CDs, certificate of deposits, it gives you a fixed rate for a certain time period. So, for example, you could have a 4% APY for 10 months. I'm going to talk a little bit about that on a later slide, what that means, but for 10 months, you're going to get a certain rate and you cannot touch that money. These are attractive products because it limits you from using it, but it gives you a higher rate. Money markets are sort of a hybrid between a checking and a savings, allows you the ability to do transactions with the account, but still gives you some interest rates. Investment services, that's the area that I take a bit more care of. That's conversations when we've reached our emergency fund, we have excess savings, and now we want to find out, okay, how can I make the most money with what I have? Investment services, we're going to talk, I think a few other gentlemen are going to join later meetings, and they're going to elaborate on that. But that is not going to be touched until you have some safety cushion in your bank. Everyone knows investments are risky, so we don't want to put everything into that basket. Lastly, we want to help folks finance large purchases. Large purchases such as mortgages, car loans, or they want to help with education. Credit cards, I wouldn't recommend making large purchases with that, but it's still an alternative if you can't qualify for a mortgage or a student loan or other personal loans. I know I just went over a big chunk, so like I said, if there's any questions, feel free to just shoot something in the chat here. Now, most people, and I'll be quite frank with you, most people aren't necessarily excited to go on like a bank visit. It's not something that is, I would love to go see my banker today. In reality, you want to start treating these sort of services that we offer almost like checkups, as if you're going to your doctors and you have your annual checkup. What we just want to do is give you the best things possible for you to achieve your personal and financial goals. Whether that's here at Citizens or other banks, that's totally up to you, but you need to do your research and find who you trust the most. So let's take a look here, what it looks like opening an account and actually doing a branch visit. There's a few things you want to find out with every single banking institution. When you open accounts, you always want to consider a few things and make sure you address some of these bullet points listed here. Some banks require a minimum balance. For example, when you open a checking account at Citizens, the minimum balance, generally speaking, is $20. Every bank account will have monthly maintenance fees, so you want to ask your banker, how can I avoid these fees? Some accounts allow you to make certain transactions to waive those. Some require you to have a certain amount. Each bank will be a little bit different, and that's sort of, you got to find out what is more advantageous to you. We look at some ATM fees. Those are across the board, but you want to find out what it looks like to actually use an ATM. Online banking access and related costs to that. Most banks these days offer online banking. It's just, we want to find out what's going to be the least costly to us. There's always some hidden fees, and they always have to be disclosed. So if you ask those questions, they'll answer, and they have to give you those answers. Specifically, when it comes to overdraft fees, we actually have you sign a document to make sure that we reviewed it with you. Overdraft fees talks about if you go into the negatives. So how can we make sure we avoid those, and how can we address those if they do happen? And then we have low balance alerts. Generally, it's also pretty standard across all banks. It's just giving you a notification if you're at the gas station and you want to fill up your car and it costs like $60, but you only have $20 in your account, you would get an alert for that. These are all questions. Oh, apologies. These are all questions you'd like to ask because each bank is going to have different answers to that. Citizens were pretty convenient with a lot of these, but so are most banks. Now, we elaborated a bit on this on the previous slide, but when it comes to the actual account opening steps, we want to, again, research and choose a bank. Most banks have everything disclosed on websites these days, but banks are also obligated to provide you the information when you go at a branch visit. Now, you want to find out what is the most suitable account for you. You want to make sure you're not going to get any of these fees, and make sure that if you're looking for interest, you're getting the highest interest possible. But you also want to make sure that you want to keep these things aligned to your financial goals. So you never want to choose an account like a CD that'll lock up your money for a few months if you have a goal of buying a car in the next few weeks, right? It's important to prepare documentation. Generally speaking, IDs and social security numbers always required. Some banks do not require a social security number, but they will ask you to have other forms instead that show proof of residency at least. The next step at the branch is you're going to apply for the account. Now, it says apply, which some accounts are given to you, whereas credit cards, you need to make an application. So bank products such as checking accounts, savings accounts, as long as you have the funds, we're able to give you that account. Whereas a credit card, the credit card department in all banks will review that, make sure you qualify for it, and then we will let you know if you could get that. Now, this is very important, the terms and conditions. Terms and conditions usually are in disclosures. They can be up to 60 pages, and in reality, nobody really goes through that fine print. But the banker is obligated to disclose all the important facts for you to know. That includes fees, that includes overdraft choices, that includes certain conditions they have to meet to keep the account. Those are all things that will be addressed to you, but I do encourage to always review the terms because we do have you sign off on those saying that you have read those. The next thing would be to submit the application. So in this case, we would have an account open, or we've submitted the application for a lending product. We would then wait. Even if I were to open a checking account, I would then have to make sure that all the documentation that I collected from you is accurate. That's what's happening when we do a lending application. They just check for accuracy. Now, the next step is then the activation of these accounts and the verification. Again, we partner with the government, the federal and state level, and then we partner with credit bureaus. So they make sure that everything that you have given us is going to be accurate. Once they've given us that confirmation, your account is ready to go. Next step is up to you. You need to make that initial deposit. That should be pretty straightforward. There's different options to make those. Most likely people have cash or a check, but these days we are very in that digital world. You can also do that online through electronic transfer, a wire transfer, different options available to you. When it comes to accessing your account, usually the day of, we give you all the required documentation and website information for you to access everything. So we'll help you set up online banking. That's what every bank does. We'll also provide you that debit card, which will give you access to your account. Now, some banks print them on the spot. Some banks will have to mail them to you. Maybe another question you want to ask prior to opening the account. And when it comes to ongoing support, these days, I would highly recommend, just because of the increase in scam, if you ever have problems, go visit your branch. We can always help. And this is any bank will be like this, not just Citizens. You can always use the tech support as well, which is like a 1-800 number that people can call to get the support that they need, whether it's issues or just questions that they wanted to have answered. Again, I think I went over a few things here on the account opening steps. Was there anything that I went over too quickly, or are we good to move on to the next topic?
No questions so far.
Awesome. Now, we're going to talk a bit about interest. Interest usually applies in the good and the bad side. When we look at interest, when we talk about APY, that's the annual percentage yield. So that's when you earn interest for money having in a bank account. Where APR talks about what you actually owe, annual percentage rate, which is charged on borrowed money. So we have a pretty good example here on the right hand, an APY example. Let's say, for example, the customer is opening a CD, a 3-year CD for $1,000, and the APY is 5%. Now, what you're going to see is 5% of $1,000 is $50. So in year one, he's going to have $1,050. Now, in year two, theoretically, it's supposed to be $1,100 because he earned another $50, 5% of 1,000. The beauty of bank products and a lot of products that we have is you compound interest. And what that means is you're making interest on the interest that you already earned. So when we look at year one, we see 5%. They were able to earn $1,050. So now if we take $1,050 and take 5% of that, we're going to have $1,102.50. And so it kind of compounds further on. So 5% of $1,102.50 would result in $1,157.63. As you can see, that number increases slowly, and that's the beauty of compounding interest. You're earning money on the interest that you've already earned. APR is pretty straightforward. There's generally no compounding in interest. That would be quite penalizing to people. But let's say you borrowed $1,000 from a bank and you have an APR of 5% in a 3-year term. So now we can see in the total repayment, $1,000, 5%, that's $50 for 1 year, times 3 for the 3 years, we have $1,150. This is not compounded. So when we borrow money, we don't compound the interest for you. Compounding interest can be a bit of a complicated scenario, but I think if you really think of it as you're earning interest on the interest that you've already earned, the concept will make sense to you. The beauty of it, we're looking at 1,000 right now. Everyone has heard of retirement accounts and that you put money into on a weekly basis. Think about doing this for 30 plus years and how much money you could earn off that. But again, that's some other representatives will elaborate a bit more on that. We got we got some types of bank fees, and that's where it kind of goes downhill a bit. And this is where it is up to the customer to make sure that you ask the right questions. There's usually 5 different categories where we apply fees. It's easy to miss those, but it's very easy to manage them. We'll start very basic. There's a monthly maintenance fee. It's just charged on bank accounts. It costs the bank money to open a bank account for you, so you're paying that maintenance fee for that. And most banks these days have ways to avoid that, whether that's keeping a certain balance, doing monthly deposits, or making certain transactions. Overdraft fees are charged when you spend money that you don't have in your account. Let's say that gas station example for the $60 gas purchase that you had, but you only had $20 in your account. We as a bank, we don't want you not being able to get home or not being able to fill up your car with gas. We're going to give you the money so that you can at least make that purchase. But there's going to be a fee for that. So take a look at those, and those are also able to be avoided. Now, some ATM fees are also avoidable, but they're mostly charged when you use a different ATM. So if you bank with Bank of America and you go to JP Morgan Chase and use their ATM, Bank of America may charge you a fee for using a different ATM. There's early withdrawal fees. That's more to fixed products such as CDs, which are certificate of deposits. If you were to take money out prior to the given date, which is the maturity date, you're going to get a fee, which is usually losing some of the interest earned plus a flat fee, which is different for each bank. There's also a thing called prepayment fee. Some, for example, mortgages will have a certain timeline for you to pay back your mortgage. Now, if you are able to pay back sooner, you're more than welcome to, but they're going to assess a fee for that. The reason being for that is usually when you get a mortgage with a bank, they sell the mortgage to another company with a promise of interest for a certain period. Because that interest is not now going to be paid, you're going to have to pay that fee on your end. So prepayment fee is very unique, doesn't happen too many times, but it's mainly for lending products. We're going to talk a bit more about some fees, specifically about overdraft fees, because they can hit you pretty fast. But have any of you folks accrued any fees? Is there any bad experiences you guys have had so far? Because I know for a fact that those are always avoidable, and I know banks always have a solution for that.
Yes, we have two comments. Someone shared that they were trying to pay off the interest on their credit card. And as they kept paying off, it wasn't making too much of a difference. So they would make the payment, but the interest would bring it up. So they totally, I guess they can relate to what you were mentioning about interest.
Yeah.
Then someone asked about bank accounts with no fees for low income individuals.
Yeah.
You had any, if you know of any?
Yeah. Well, to address the first remark was interest, and this is where credit cards and these lending products get scary. You will always get interest charged on the principal. Now, the principal is what you originally borrowed. So, to make an easy example, your credit card, you spent $1,000 on it, and you have 20% interest. So if you continuously pay off the interest, you're going to pay that 20% off $1,000 over and over and over. So that's $200. You're not actually paying down the principal, which is ideally what you want to do to avoid that interest fee that's going to continue to grow. I think a lot of the lending products have prepayment fees. It is a very responsible product for you to have, and if you're not due diligent, it can really turn on you very fastly. Now, in regards to the second remark, I think when it comes to low income, all banks provide products that won't require high balances for you to keep. I think what's very important is to ask those questions when you visit a branch. For example, at Citizens, we have bank accounts that require you to make a deposit once a month. If you were to work and you get paid from your job and you deposit that into your bank account, you're going to not have a single fee on that. There's different products that are more suitable based on what your lifestyle is like. Now, people mostly work and people get paid for work, so that would be a product that's suitable for you. Now, as your lifestyle and your income changes, you can always change that. As I said, each bank has their own unique way of making sure you don't get those fees. So yeah, everyone has I'd say 3 types of relationships that they offer. A very entry level. We want to help you start your banking relationship with us. We're going to avoid all fees. This is very preliminary. Let's get you started. Then as your relationship grows, and this is, again, for most of the banks, they introduce you some perks where they require you to have some balances, but it comes with some white glove services. And eventually you get into that third realm where it's like the private client side. Again, all banks have that, and that comes with a lot of services that are totally waived for you, whether that's taking care of taxes, helping with financial planning, creating estate planning for you, a lot of different avenues that you can go. And banks are really here to help everyone. I hope that helped, but I am going to move forward to the overdraft fees here now, if that's all right. All right. So I talked about overdraft fees. We'll actually use this example right here. If you can see, purchase 1, purchase 2, and purchase 3. The debit amount was $120 for the first purchase, $30 for the second, and $15 for the third. Now, the way overdrafts work is we will always allow you to go into the negatives for certain charges. And those, I'm not going to go over which charges are allowed or not because it's a long list. But emergency expenses, bills, utilities, those things will usually go through because these are necessary for us. Whereas you buying a drink at a restaurant or something like that may not be a necessary purchase, and we may block that. So when it comes to these overdraft fees, as you can see, these 3 purchases caused the individual to go into the negatives. So we gave this individual a total of 20, 50, 65, roughly like it was close to $70 that we gave the individual, and they're going to have to pay interest on that back. So what that means is we were able to allow you to keep your lifestyle going, be able to make the purchases that you need, but because we did that, you're going to owe us the money that put you into the negatives, as well as that fee, which is $35 for each transaction. And those can add up quickly. So if you don't manage and if you don't make sure that you have balances available in these accounts, you're going to get hit very hard with fees. If you take a look, $105 for the 3 fees. For 3 purchases, I think it is a substantial amount, and that can really hurt you. So these are questions that you need to ask to your bank and to your bank representative. How are the overdraft fees set up? How are ways we can avoid them? And most banks also have different overdraft options for you that can be a bit more beneficial to you. Generally speaking, don't spend money you don't have. It will hurt you. But in order to avoid those, keep track of your balance, set up some alerts, create a budget. And I'm a budget freak. I have everything set up on an Excel sheet. I know where every single penny is going. Link your checking to your savings account. This will allow you, in case of borrowing money from the bank, you can borrow money from your savings account and cover it for that. There's opt-in and opt-out of options when it comes to debit card overdraft protection, which is what overdraft fees are. You can opt out of it. So what that means is you're not going to borrow money from the bank. It's just not, the transaction is not going to go through. It's a choice that we give you. You do not have to do this. It's always important to have a cushion too. This kind of ties back to your budgeting and that emergency fund. Really, you want to understand how much money you have, and you don't want to spend more than you have. I think I wouldn't mind spending an extra minute on creating a budget, and I think we have a slide on that later. But I think it's very important because once you start budgeting, you start understanding where your expenses are going. You start to get into a certain rhythm where your savings, your bills, everything is set up so automatic where you're just living your life stress-free. Anyone have any thoughts on overdraft fees? If not, we can transition to managing our accounts here.
No questions for now.
Yeah. So when we take a look at managing your account, there's really 6 buckets that we want to make sure that we address. Monthly service fees, I think we talked a good amount about, but make sure minimum balances or direct deposits or processes are set up in order for you to waive the fees. Every bank will, with every single account, will have the option for you to avoid those fees. You want to make sure you keep track of your balances and outstanding payments. So when I talk about that, this is where online banking and mobile banking actually comes quite in handy. I almost check it every day to make sure I have everything that I have in order. But because I'm also a budget freak, I'm not really too concerned. We want to make sure that we avoid those overdraft fees, and that ties back to making sure we balance our accounts and make sure outstanding payments will be taken care of. We want to always review our statements. Now, the reason I mentioned that is there has been an increase in a lot of fraud. The banks and all banks do the best of their ability to fight fraud and protect you from those scenarios, but due diligence always helps. So if you review your statements and you see any inconsistency, you can fight that and you can submit a claim to get your money back. It asks you to create and follow your budget. I think we addressed a little on that already. And then using financial institutions' ATMs. I think that's very important because a lot of people think it's more convenient for you to just go to another ATM. But all these other ATMs, they're not doing this for free for you. Usually it's like a $3 to $5 charge. Now, managing your account in general, I wouldn't worry about it too much. I think for most people that have a job that are able to balance themselves and are not really spending too crazy, they're not going to be hit with any fees. It's really these extreme scenarios where you're constantly in the negatives or you're really not making any money. It's hard for you to avoid fees if you're in that scenario. But there's also solutions to that. You can always have credit unions and other banks look at products for you for people that don't have an income at the moment. There's always something for you, but fees are usually easier avoided if you've got good income as well as a good balance. Now, has anyone experienced anything when it comes to on the investment side, any fees like that?
No comment so far.
No? Talk a little bit here about online and mobile banking. Pretty much allows you to have 24/7 access. Beauty of it is it's accessible on your phone. You can really access it wherever you want as long as you got good internet. The downside to online and mobile banking, the more convenience we offer you and the more you expose yourself out there, the more of a risk you take when it comes to exposing yourself to fraudulent people. So for that measure, we have two things in place. We always have alerts and notifications. All banks these days send you a notification of, did you make this transaction or do you agree with this transaction? They look at suspicious activity to make sure that a large chunk was just taken out of your account. Was that truly who you say you are? And nowadays we have multiple factors of verifying who you are. So we don't just ask for a strong and secure password. You'll most likely need a mobile phone number to verify. And then as well, those CAPTCHA options where you got to make sure an image shows exactly what it's asked for. Mobile banking is very convenient, but like I said, the more you expose yourself, the more you put yourself out there for risk. As long as you treat everything in a very safe and secure manner and you don't share anything with anyone, it's a very protective place for you to do everything. And I'm sure most of you folks are using online banking. Now, I personally don't write checks anymore. Some people still do, and I wouldn't say checks are disappearing. Checks, generally speaking, are you taking from one account to another account. Okay. All right, we'll do. Yeah. Sorry about that, folks. When it comes to writing a check, you want to make sure that you fill in the current date. You have a name, who you're paying it to. There's usually it says it right there, paid to the order of, and you have to write it out. You have to then also, and this is usually the tough part, write out the full dollar amount and if you can see, it says 535 and 41 out of 100. Needs to be written out. Usually there's a memo option on the bottom. Up to you if you fill that out. Again, people do that just to have sort of categorize their checks a little bit better. And then 6 is actually where you sign your name. Now, on the back of the check is where the recipient would sign it. Now, if you were to write yourself out a check, you sign it yourself. If you were to give someone a check, they would need to then sign it and deposit it into their account. Does anyone here still use checks? I barely use them, so.
No check comments. Probably not too many people.
No, it's fine. I think these days, everything being so digital, yeah, it's easier to use Zelle or Venmo or Cash App to send folks money. We're going to talk a bit about debit card basics. What's important for you to know is a debit card allows you to have access to your money and use it wherever you really like. A debit card is pretty much your access to your checking account. You have the option to tie it to your savings, but I generally don't recommend that. The way we look at debit cards is, let's give you the option to do your day-to-day purchases, but let's not tie that debit card to all of your bank accounts. So let's really just have that to that one spending account. But it's important, debit cards, almost like credit cards, the swiping can be pretty easily done. So you need to make sure you monitor your balance and make sure you avoid those overdraft fees. Not all debit cards have that overdraft coverage option where you can opt in or out of. If you opt in, you borrow money from the bank. If you opt out, you're pretty much saying, if I don't have the balance, I do not want to make that purchase. You can keep your card and PIN secure. Yeah, I mean, that's very important. If someone else has your PIN, that's going to be a little problematic. I also don't recommend you make your PIN the exact same as your iPhone or whatever phone you use, that PIN. Try to keep it a bit different. And you're able, through online and mobile banking, report those cards stolen immediately. If not, you can also visit your branch and we can do that there. The difference between debit and credit card, and it's very important. Debit, you're using your money on your account, whereas a credit, you're borrowing money. There is a third card. I'll throw that in the mix there. It's called an ATM card. An ATM card is a card that you can only use at a bank or branch level. So it allows you to use an ATM and allows you to do transactions at a branch. You can't make any purchases outside at a grocery store or whatnot. Those are sort of the 3 card options that you have. There's also, now that I think of it, there's a 4th option, but that's on the credit card. And that talks a bit more about unsecured and secure credit cards. And I think we have a slide on that a little later. But let's transition into some budgeting and savings. This is my favorite topic. Generally, when customers come to see me, my conversations evolve around more, yes, you have a bank account, but how can we optimize your accounts with us and make you reach your financial goals a bit more strategically? Let's talk a bit about budgeting and savings. I'm sure all of you have heard of like Warren Buffett. Warren Buffett actually is one of the folks that created the 80-20 rule. In this case, they have the 50-30-20 rule. But that pretty much talks about, let's say you make, and this is just for easy numbers, $100 a year. $100, so 50%, you want to make sure that $50, it's just going to be spent on you having a roof over your head, you being able to eat, you being able to do your basic human needs. Now, the other 30%, which would be the $30, you'd be able to take care of the things that you'd like to do. Go on a shopping spree, go on a vacation, maybe even purchase your your car that's coming up or a condo. And then lastly, 20% is for savings and debt repayment. Now, these numbers are very high. 20% savings is hard to do, and most people are not able to achieve that. But I want you to understand, and this is what Warren Buffett says, is if you're able to save 20% of your annual salary for 25 years, if your lifestyle doesn't change, you can retire. Now, for most of us, our lifestyle is going to change. I'm going to get married. I'm going to have kids. I'm going to have a house that's going to be extra expensive. So my lifestyle will be quite different. Being able to save 20% a year is going to accelerate your retirement goals. Now, people want to strive to get as close as that as possible. I think the retirement specialists will elaborate a bit more on that. But ideally, if you can do a lot of your savings and treat that as a bill and park that money aside with that compounding interest that we talked earlier, you can do that for over 20 years, you're going to have a very, very comfortable life. But let's talk a bit, take a step back here. Some strategies around finding stability and reaching your financial goals, we always want to track our income and when we want to talk about expenses. Tracking income expenses, really inflow, outflow. I keep an Excel sheet on online banking and all banks. You can see what comes in and what goes out. But if you have an understanding of, $100 a year was a tough example. Let's do $100 a month. I make $100 a month, and I know $50 of that is going to go to my needs for me to survive. I will have a lot of wiggle room between my savings and what I want to do. Now, what's the difference between that? Really, that's where we go back to our SMART acronym. We want to make sure that the financial goals that we set are achievable and reachable within a certain time period. So that falls more into that 20% category. The 30% for the wants and non-essential expenses is not really something we're gonna save up for. It's extra that we have. So in that month where I have the extra $30, I may grab a couple, some ice cream. Who knows? I may spend some money that is not aimed towards anything. I want to live my life, and that's totally fine. You don't want to be a budget like hawk, and you don't want to be too cheap. You want to find a good balance in your life. But as long as you take care of all your financial needs first, you want to prioritize your savings, and then whatever is left over is going to be your wants, whether that's new shoes or whatever it may be. Some of these saving strategies, I treat my savings like a bill. So I have automatic transfers set up. I know when I get paid every 2 weeks. So every 2 weeks, my saving increases by a certain amount. I know that it's happening. It's just like I would pay for my Wi-Fi bill. Pay yourself first. That's exactly what it is. You're paying for your future self. Think about if you start today. I'm 28 years old. I'm not going to retire before I'm 60. I have all this time where I can compound, and I'm paying myself now so that I know when I'm in my 50s, I'm already going to have a pretty solid cushion. There's roundup programs. I'm sure you've heard of Acorns. There's other, like we at Citizens, we also have a roundup program where, let's say you purchase a water bottle and it costs you $1.99. That 1 cent will then be transferred to your savings. So we always round up to the nearest dollar. And then set up separate accounts for each goal. I work at a bank, so I can open a ton of accounts for myself. And I have an account for almost every goal that I have. It's nice because you see an actual number that grows. And I'll tell you, it is very, it's rewarding to see you finally reach some of those goals, because it does take a lot of work and it takes sacrifice. But budgeting will ultimately help you in the long run. Not just on your financial goals, it'll allow you to have a way more flexible life. Just because now you're not going to run around stressing out about, oh, if I'm going to spend X, Y, and Z, am I going to be able to cover expenses for the month? Make your life easier. Did anyone budget here? Is anyone like me? I'm a bit of a weirdo when it comes to that, to be honest.
We do have a budget sheet that we can share with participants who are interested.
Yeah, I think they should definitely take advantage of it. It will help. But let's move over to the some credit basics here. You want to understand mainly that credit really impacts everything in the U.S. If you want to borrow, and you will borrow, you will one day want to maybe have a house. You will one day maybe have a car, and you may need to borrow some money. Nowadays, if you want to go live in an apartment, I'm from Boston. You need to have a good credit score for that. So, you want to start building a good credit. And when it comes to monitoring your credit, making timely payments, all that is going to help you in the long run. The way to build good credits, and there's a lot of different theories, but ideally it goes back to budgeting. So let's say you have your income is $1,000 a month, and you have $500 in expenses. So now you want a credit card that has a credit limit of 500. So now with that 500, you can pretty much pay everything. You're good to go. The other is miscellaneous. You don't need that. But this will allow you to have timely balances. You can keep your balances low. You don't need, I've heard folks talk to me about they need to have 6 or 7 credit cards. Yes, that may be true if you can't get a high enough credit limit. Ideally, you want one credit card that'll cover for that month all of your expenses. So that's how much you want your credit limit to be. And ideally, you don't want to use 100% of your credit limit. If you can imagine, if I were to borrow you money and the next day you spend all of it, I'm going to feel a little bit more concerned than if you were to only spend 50% of that. Because I know this person is not going to just spend everything and run away. The way credit cards work when it comes to establishing your credit score is really spending and being able to pay what you spend off. Now, there are circumstances where emergency comes up and you may not be able to pay it off, so you start accruing up credit card debt. Maybe not just credit cards, and maybe other debt that you're accruing. For example, that emergency came up and you weren't able to pay off a mortgage. So there's different strategies on how to repay them. I personally prefer the avalanche method over the snowball method. The snowball method talks about paying the smallest debts before the largest based off interest rates. So this would talk about mortgage rates generally are lower than credit card rates. So this would tell you pay your mortgage before your credit card. In my opinion, I would reverse that, and that's what the avalanche method is. Pay off debt with highest interest rates first. The reason that is the highest interest rate is that percentage, and that's going to hurt you the most. You're actually paying the most if you have $100 borrowed on a credit card and a $100,000 mortgage. A $100,000 mortgage is 5%. The credit card is 20%. If you don't pay either of them for 20 years, that 20% is going to be a lot higher than the 5%. Reason being, it's just the interest rate is higher. You want to pay off the highest interest rate first and then start moving towards the low interest rate. What people do that if they can't do that, they consider debt consolidation options. Some credit cards offer you, for example, to do balance transfers. So if you come bank with a certain bank and you have other balances, the bank will accept those balances and allow you to pay that back over a certain period of time with no interest. There's different debt consolidation loans as well. I think those loans are ideally more for experienced credit holders. These loans are equity loans where you pretty much borrow from assets that you already have. So these debt consolidation loans can be a home equity loan, it can be an asset-backed security loan. So you're pretty much promising that if I can't pay this back, you're going to get my house. If I can't pay this back, you're going to get these assets. So debt consolidation loan allows you to borrow money from whatever asset you have to pay off other loans, and you are pretty much putting at risk your mortgage or your investments. Again, credit basics I think could be a topic in a loan for a full hour, but this was just a high level overview. Generally, I would always advise speak to a banker, and they will have some good recommendations for you. Fraud prevention, you want to stay informed and vigilant. Again, the more expose yourself, the more risk you're willing to take. Really common types of fraud are phishing. Those are the emails that get sent out, and it's from a fake company pretending to be that company, asking for personal information. Identity theft, someone stealing your social security number, for example, and using that to open a bank account. That's how they do a lot of credit card fraud. Let's say someone steals your credit card too, and they use that. That can always happen. Same with the ATM and debit cards. You want to protect your information. Like I said, if you are going to use these online banking applications or just your PIN, for example, you don't want to share that with folks. Most of the times we have two-factor like authentication methods, and use secure connections. I wouldn't go to a public library and sign into your online banking there, maybe. And then make sure you report if you notice anything suspicious. I would never hesitate. It's easier to take action than immediately than fight for something that has gone away. There's a timeline on, I think it's 13 months for you to report a fraud on your account. I'm running through this a bit quickly here, but I think we reached the last slide. I highly encourage you folks to take a look at what bank you're currently banking with. Find out some information. Citizens has a website. All of the banks these days have a website. Find out what suits you, and then make sure you ask the right questions. I think all of this will be provided to you, but some of the slides I think will be beneficial for you to have even when you visit that bank. But yeah, I hope you learned something today. I'm always open to some feedback. If there's something that I can improve, or if you guys want me to address something, please let me know. But that's it on my end, I believe.
Funny. Hi. Yes. Thank you, Cooper, for that awesome presentation. I feel like it was very encompassing of all of the financial basics we need. So I really appreciate it. And your personal examples as well were really helpful.
That's right.
So much. Yes. If anybody has any questions, please drop them in the chat. I'm going to share some slides just to close up really quickly, some resources for everybody. And starting with, as we were talking about savings, our smart saving strategies for every life stage seminar, that will be not next week, but the week after of October 8th. We are skipping seminars for next week, but don't worry, we will be back all the way through November, and that one is about savings. So definitely sign up if you get the chance. And as always, we offer free financial coaching for up to 1 hour. With our accredited financial coach, Samantha Morales. You've seen her in some webinars. If you're not new here, she is great. You can talk to her about creating a budget, saving strategies, debt repayment, banking and fees, a lot of the things that were covered today. So make sure you book your free appointment, no commitments afterwards. And lastly, we have a platform called Enrich, where we have mini courses, blogs, articles, quizzes, a financial self-assessment quiz, all of the things to help you on your journey for financial wellness, financial empowerment. So definitely check out Enrich if you can. And as always, we're always here to answer any questions you may have. Cooper, thank you again, and have a great day, everyone.
Everyone.
Bye.
Thanks again.